Good morning, guys. My name is Sean Dexter, and I welcome you back to the Mango Grove for a daily Bitcoin and market analysis. Alrighty, Bitcoin sitting in a rather precarious position, threatening to break down, but it's also in one of those more insidious structures where it kind of traps everyone out of their positions, where everyone ends up losing, the bulls and the bears. So in today's video, we're going to be doing a breakdown on Bitcoin. We're going to be looking at the mid time frames and the lower time frames. I'm going to be telling you guys how I'm looking to play this and the key levels that I'll be looking for Bitcoin to reach, provided we do get that breakdown. I'm also going to be giving you guys an update on what's going on with the FOMC target rate probabilities. Remember, we do have an FOMC meeting coming up in a week, right? And what's going on over here is really interesting. The market's sentiment is swaying from one side to the other at the moment. So with that being said, let's scroll back up and get started. I do want to point out very quickly, before we do an actual volatility and trend analysis profile on the dashboard, that Ethereum's trend on the daily time frame has switched to neutral, right? Earlier this morning, 4 hours ago, it switched to neutral. Volatility is rather low as well. What you want to make of that, you guys are going to have to decide. I'm not doing Ethereum analysis in this video. Do you guys want me to cover Ethereum every now and then? Pause the video and let me know in the comments right now. Accordingly, I will allocate time in these videos for Ethereum. But if you guys rather me just stick to Bitcoin and macro, again, let me know if you rather that. So again, pause the video quickly, let me know in the comment section down below. All right, so let's go ahead and get started with Bitcoin. Here I have a screenshot of Bitcoin on the weekly time frame, and if you guys do remember from the previous video, which was the Monday open, right? We opened a brand new week. We talked about how, hey, Bitcoin did have a pretty good weekly candle close. Okay, it was a good weekly candle close, and more importantly, the previous week, that week rather, we took out the key high coming in from September, right? That was an important high that Bitcoin took out. However, we did not close above that high, okay? And that's where a lot of traders go wrong, where they do not place enough importance on the candle close. So what I like to look for confirmation, guys, is both. I like to look for the high getting taken out, right? So we want to see the high getting taken out as well as the close above the high. When you see both of that, you get increased confidence. Now, in our scenario, what we got was we got the high taken out, but we did not get the close, right? The close failed to close above that key resistance high that we had marked out. So we said that as long as Bitcoin is closing candles underneath that high, we are going to be looking at that level as resistance. And as you guys can see, we are facing some trouble right over there. Now, albeit this is just the beginning of the candle, right? We are still midweek. There's 4 days left to go before this candle closes, and a lot can happen. But a lot can happen on the mid to lower time frames that allow for tradable opportunities, right? The daily could break down, come down on over to weekly support, and then bounce up, and we could close above the high. 7 days is a lot of time for things to happen on Bitcoin, right? Like we could literally have a wick coming all the way down to around this level over here and then close above the key high. The key high is around, I think, 22,800. And as long as Bitcoin is closing weekly candles underneath this level, I will be looking at this level as resistance. And if you guys remember, this is not all that we were looking at. I want you guys to draw your attention to the dashboard screenshot right over here. You can see that the daily trend is still long. This is the daily, by the way. Let me quickly write that down. This is the daily dashboard. The daily trend is still long. However, volatility was pretty high. In fact, in the previous video, this vol was sitting at around 90-ish, right? Really high. We also had bearish divergence. So we had high volatility going into weekly resistance with the potential of bearish divergence, right? That recipe is something I just did not like, and I did not want to be trading against that level right over there. Weekly resistance, high vol on the dashboard, and potential bearish divergence, right? On the 12 hour as well, we saw all of that. And we're going to be diving into this a lot deeper as I go into the daily time frame chart very soon. But I just want to lay down the current backdrop, saying that, hey, you know what? We're sitting up against resistance. We have high volatility, and we also have the potential bearish divergence, right? This is just not a recipe that I like trading into. And if I do trade into this, it'll be very, very low position sizes, right? So again, guys, holistic picture is what matters. Now, let's go ahead and scroll down. I'm going to take a current look at the volatility profile across timeframes, the 4-hour, the 12-hour, and the daily time frame on the dashboard over here, right? From top to bottom, 4-hour, 12-hour, and the daily. You guys can see, again, it's long across all timeframes. But like I said in the previous video, just because we're long across all timeframes doesn't mean you just willy-nilly long into the trend. While the trend was nice and long across the low to mid timeframes, guys, we still had weekly resistance like we pointed out, and the vol was really, really high across all timeframes, right? Now we are seeing volatility start compressing on the 4-hour time frame. Right over here, we've come down to 58. It's still on the higher end, but it is reducing, which is good. On the daily time frame too, volatility is reducing. The 12-hour is still pretty high, and honestly, the 12-hour time frame is where I am the most concerned. I'd really like to see this volatility on the 12-hour and the daily both begin to compress down to the mid 50 regions at the very least. I know this might be confusing considering that the trend is long across all of the time frames, right guys? But again, the holistic picture is what matters, and we have potential bearish divergence on the 12-hour, potential bearish divergence on the daily along with high vol. Right? I'd much rather us have a trend profile where the 4 hours actually short, right? The 12 hours long and the daily is long, as long as we have low volatility, right? If we switch to this trend profile, it may actually lead to the volatility on the 12 hour reducing and on the daily reducing too, right? So even though the 4 hour switch is short, I'd much rather prefer this, right? And if you guys are in the seed program and understand your trend analysis module, you guys know that this trend profile over here simply means that you have a lower time frame downtrend with a higher time frame uptrend, and this lower time frame downtrend is simply pulling back on over to higher time frame trend support with a potential continuation of the trend, right? That's how you get your bull flag pattern like structure right over here. So again, having a short trend on the lower time frames while your higher time frames are long, as long as the volatility starts reducing on the higher time frame side, is actually a much preferable trend and volatility profile. So yeah, just wanted to quickly explain what's going on over there. Now let's go ahead and take a quick look at the screenshot of the daily time frame, right? And we have a really interesting picture that is shaping up over here. An argument can be made for both the bulls and the bears over here, okay? On one hand, the bulls can say, hey, we have a bull flag right over here. And you know what? There's a strong argument for that. We do have a symmetrical triangle with a nice pole, right? And a symmetrical triangle, you guys know my thoughts on that. You always lean towards the break happening towards the side of the trend, right? Because technically a symmetrical triangle can break in either direction. There's an equal probability of it breaking towards either direction, right? And you do have your higher low intact. That's coming at around 22,300. So as long as 22,300 is being held and being defended by the bulls, you can argue for a bull flag. However, the bears also have a very strong argument, especially when you go ahead and zoom in on this candle right over here, guys. You guys are going to see that this candle that we just closed underneath the open of this consolidation, right? So this candle closed underneath the open of the bull flag consolidation that the bulls are hoping for it to break to the upside. On top of that, we also have resistance overhead on the weekly time frame. Okay. Now the level I'm referring to, guys, that we just closed underneath is 22,671. It's coming in from the open of Jan 21st, right? It's that candle I'm referring to. We closed today just a few dollars underneath, right? Around $25 underneath. Now, is that enough to be confident that we are going to get a break towards the downside? In these junctures, I would actually argue, yeah, that's enough to be cautious. Again, especially when you look at the entire picture, higher time frame resistance, high volatility, and the fact that the current environment is purely TA based, right? I think it's many traders that are in this environment. We don't have a rush of fresh money coming in and just bidding the market. I would put a lot more importance on technical analysis, actually seeing its play through over here, right? So if we can reclaim that level on the next daily candle closes, and especially if we can reclaim the weekly level that I'm looking for Bitcoin to claim, which is 22,800, right, from the previous screenshot upstairs, that's when we can have increased confidence, especially when we see this in a consolidation manner that drops the volatility down on the dashboard, right? We're looking for the vol to come down to around like the 50-60 region at the very least. Until then, if this does see a breakdown, we'd be targeting these levels over here, 21,800 first, and then if we lose 21,800, we're looking towards 21,300 to 20,900, right? I also did forget to mention that another case going strongly for the bears is the bearish divergence, right? If you look at the oscillator profile over here, again, guys, this is potential bearish divergence that has not triggered, right? This will be triggering as soon as that low gets taken out over here that we talked about at 22,300. That would also trigger the bearish divergence. So the bulls will be getting negated on the asymmetrical triangle trade, hoping for it to break to the upside. No longer can they hope for that because they now have a lower low, right? So it's no longer a symmetrical triangle. So anyone playing that pattern is going to be getting out of their trade. On top of that, we'll have the bearish divergence traders coming in as well, because over here we have a high with a lower high, but price has put in instead, let me scroll up for you guys, price instead has put in a higher high, right? So between this point and this point, we have a higher high, but on the oscillators, we have a lower high. So we do have potential bearish divergence so that could trigger. Now this is where it gets really, really interesting, right? How deep do we go? How deep do we go? Because we have these levels over here that I marked out for you guys, right? 21,800 and then all the way down to 21,300 to the lower 21,000s. So do we get to the first target or do we actually get all the way down to the second target? That's where, in my opinion, you guys should be looking towards your 4-hour time frame. And you guys know that I don't often ask you guys to look at the lower time frames, but over here we may actually put in something a little bit more insidious that Bitcoin tends to do. The 4 hours looking really weak, right? We have a really distributory formation over here, which again adds credence to what the bears are looking at, right? Even though the daily is looking like a nice bull flag, right? Looking at the bigger picture, I have to give the edge over here to the bears. However, from my experience, and this, by the way, guys, does come from experience trading, you guys can see right over here that the 4 hours actually broken a key level. We close slightly underneath. This lines up with the daily candle close that I was talking about too. We close underneath that key level. The 4 hours close underneath, but more often than not, guys, you guys are going to see the 4 pop up over here again, okay, pop back into the range and then break towards the downside. At that point, you're going to see some more shenanigans. Instead of looking for, all the 4-hour traders, by the way, guys, are going to be looking for this level to be hit, which, by the way, is somewhere around, it's our second target, okay? It's 21,300-ish to 20,900. This entire zone over here is what people will be targeting. However, there is a level in the center between this 4-hour consolidation that we're currently at and the consolidation that we came out of. There is a level that is derived from the weekly time frame. That's where I want you guys to be keeping an eye on. Watch what price does over there. Because if price bounces at this level, which, by the way, is 21,800, it's our weekly derived level. If price actually bounces there without reaching the 4-hour level, then you're going to see something interesting happen on your daily time frame, because this daily stochastics, or rather daily RSI, may not actually come low over here. It may actually stop somewhere around here. And that would actually, as long as it's higher than this low over here, flip this into a bullish divergence on the daily time frame. So you're going to have one of the scenarios where your bearish divergence actually sees play through, but because of weekly support, gets supported and flips into bullish divergence. And in that case, you're going to have a sort of like bull flag now form on the RSI. And when you see a bull flag on the RSI, you'll be surprised as to how often that actually plays out. Okay, so yeah, keep an eye out for that too. Again, these are all if this then that scenarios, right? But that's what trading is. There's no certainty at all. There are all probabilities under if this then that scenarios. So look at your 4-hour and look at your daily time frame and keep an eye on, or rather keep at the back of your mind, that we do have weekly resistance overhead. So how this weekly candle closes is going to be really, really important, right? Remember, we talked about weekly resistance, 22,800. a lot can happen in these 7 days. Okay, the daily levels could play out, get retested, the 4-hour levels could play out, get retested, and we could still close the weekly about 22,800 after all of that plays out, because we could flip the daily bearish divergence into bullish divergence, and by the end of the week the volatility will come down as well. Everything may get put in place for the next week's candle close. But until we see that, we have to be patient. Okay, we have to be patient. And on that note, right, I do want to give a quick shout out to Easy Shorter as well as Ajesh, right? Both of them I've been noticing in the seed program. I'm going to quickly switch. You guys can probably see my Discord. Easy Shorter was talking about how he could feel this pullback. Okay, he could feel it coming, but he was upset at himself for not putting on the trade. And I want to say, man, you don't always have to put on a trade when your instinct is telling you that it's going to come down. Sometimes just not going bullish and not putting on a long trade is enough, right? Because now you have gunpowder to actually put on the trade when it does matter. You don't have to trade in every direction. You don't have to trade long and short. You could literally tell yourself, you know what, I'm going to trade only one direction. I'm going to play only long. And when I feel like the markets, or when my TA is telling me that the markets are going to pull back, I'm just not going to put on a trade. I'm going to save my gunpowder. And instead of beating yourself up about it, like he said right over here, he says, in fact, I'm beating myself up about it. It was such an easy trade in hindsight. Don't beat yourself about it. Be proud, man, because you've come such a long way from just a few months ago on how you are able to read the charts. It's really, really impressive. I also want to give a shout out to Ajesh. If you guys look at the right hand side over here, I have filtered out his messages, and he's become so good at reading the charts. Like, he's posting screenshots and marking out things, and I'm like, hey man, is that my screenshot? Because he's doing it just the way I would, right? So he's been really watching the videos, and it's just, man, it's Ajesh, honestly, man, it's really impressive, dude. Really impressive, good stuff. And you guys should start following Ajesh. Read everything that he's been posting. I have upgraded his role to chartist. So yeah, man, I'm so proud of so many of you, Sam, Philippe, and all of you. You guys make my heart swell. It's so great to see how far so many of you guys have come. So yeah, let's get back on to what we're talking about over here. Back to OneNote, and yeah, we're talking about the 4-hour. Ooh, yeah, let's wrap up with the FOMC target rate probability screenshot. So this is from earlier this morning. I took the screenshot, and you guys are probably noticing something different over here, right? Yeah, so for those of you who are just joining us, what exactly are we looking at over here? We're looking at the target rate probabilities from the Fed Watch tool. This is essentially a visualization of the probabilities the market is placing on what they think the Fed is going to raise interest rates by, right? So right over here, we are seeing that the market thinks that there is a 98% chance that the Fed is going to raise interest rates by only 25 basis points, right? 25 basis points essentially means 0.25%, okay? And there is a 1.4% chance of a 50 basis points hike, which is, again, 0.5%. Now, this is in contrast to just a couple of days ago where they were placing a 0% chance for a 50 basis points hike, right? There was a 0% chance. You don't even see it on the graph over here, on the bar graph, because this over here, guys, the 0.2% chance was for a 0% hike. So just a couple of days ago, the market was deliberating between, hey, the Fed is either going to not raise at all or raise by 25 basis points, right? Well, now this consideration is kind of out of the picture, because now some of the market, at the very least, at least 1% to 2% of the market thinks that we may actually get a 50 basis points hike, okay? The reason I want to point this out is because I want you guys to know that the market doesn't know what the future is going to be for sure. Okay, they can always change their opinion, and according to that, the market reprices itself. Just 1 month ago, okay, if you guys zoom in over here, actually I have a screenshot, a zoomed in screenshot for you guys. Just 1 month ago, right over here, you guys can see that this column, okay, is 1 month, and this row over here is the probability for a 50 basis points hike for the month of Feb, right? 1 month ago, there was a 34% chance for a 50 basis points hike. Today, there's only a 1.4% chance for a 50 basis points hike. So all of that, right, from 1 month ago, all of that bearishness, 34% bearishness, got priced out of the market. What if this starts getting priced back into the market in the months to come? And if for whatever reason the Fed actually comes in and surprises the markets by raising interest rates by 50 basis points, this is actually going to send the market tumbling, because now all of the certainty of only a 25 basis points hike, it's all going to be wrong. The market is pricing in bullishness already for only a 25 basis points hike. So as soon as we get a 50 basis points hike, all of this needs to get priced out, guys. That's going to hurt the markets. That's going to be a hawkish surprise that's going to hurt the markets. And in the previous video, I talked to you guys about why the Fed may do this, right? We are seeing financial conditions loosen. We are seeing mortgage rates come down. We are seeing employment still high. And all of those things are upward pressures on inflation, right? Mortgage rates coming down, equities going up, and employment still being high. That's the trifecta for an upward pressure on inflation, and the Fed is not going to want to have that get out of control again. At the moment, inflation is coming down, right? And again, I don't think we're going to see a 50 basis points hike, but that's exactly why we should be cautious. When you look at the entire picture at the moment, we're sitting at weekly resistance, we have a high volatility, we have an upcoming Fed meeting, we have a big event. It's just not the right time to be putting on too much risk. All right, and that's pretty much it, guys. Let me know if you guys did enjoy this video in the comment section down below. Remember, guys, while Bitcoin did have a nice leg up, we are sitting up against weekly resistance and volatility is pretty high. Keep an eye on the wall on the dashboard at all times. Oh, and by the way, for those of you who don't have premium access to the dashboard, there is a free trial that you guys can take advantage of to play around with the premium version. All right, so until the next one, do the mango way, do the easy way, do it the stress-free way. Ciao.